Hi, everyone. Welcome, welcome, welcome. Welcome to the Capital Strategist Podcast. I'm your host, Kim Cian Duncan, CEO of Digital Financial Technology, Inc. And we explore business and finance with a sharp, strategic, and soulful edge, bringing you top experts, fresh ideas, and yes, a few laughs along the way. So I'm going to go ahead and take a few moments just to make sure that we are actually live on Facebook and LinkedIn. So give me a second, guys. I'm just going to go through, just making sure that we are truly live. If you are hearing me, definitely go ahead and comment below that you are hearing me. I do see that I am live on Facebook. So hello, all my Facebook family and friends. And I'm going to go into our LinkedIn and make sure that we are live there as well. Give me a moment here. How's everybody's evening? Saturday, right? So if you're at home, go ahead and grab something to drink. Again, I don't judge. So whatever you want to put in your cup is your business. Just kidding. Grab yourself a cup of coffee, grab yourself some hot chocolate or anything else that you want. Maybe a few snacks, because I'll be on here for about 45 minutes or so tonight. So welcome, welcome, welcome. Where are you actually tuning in from? Let me know that. Um, yep, I'm still trying to see. I know that our LinkedIn is a little delayed, so I'm just giving it another moment or two just to see if we are streaming on LinkedIn. All right, see where we are. All right, I see me. I see me. It seems like I am live on LinkedIn. Awesome, awesome, awesome. Where are you all tuning in from? Tell me where. Let's see here. Um, all right. See. Oh, great. Oh, so so we know that LinkedIn is live. Great, great, great. Okay. So, every now and again I'll go ahead and check the comments just to make sure I'm not missing anyone. And cuz I definitely want you all to be interactive tonight as we are going live. Okay? Wonderful. All right. Again, where are you all tuning in from? Let me know. Okay. See here. Okay. Awesome. Donnie. Nice. From Tucson, Arizona. Awesome. Donnie, welcome. Welcome. Sheila, New York City. Oh, lovely, lovely, I love New York City. One of my favorite cities for sure. Addison. Thank you for joining. I appreciate you. Awesome. Well, folks, let's go ahead and get started, shall we? Okay. So tonight is September 27th, 2025, and it's 7 p.m. Again, get some snacks and so on. And thank you for joining tonight with me. I am so excited to be able to bring this segment to you tonight. I think it's going to really be very I would say gratifying to you. All right. So we have a rich conversation planned, and in this episode, we'll be exploring how capital strategy, financial planning, and values aligned wealth building intersect. All right. We'll be talking about behavioral coaching, purpose driven financial planning. And yes, we'll ask one question about commercial real estate if you're tuning in specifically for that commercial real estate segment. So what's happening in the markets right now? It's terribly fascinating. The Federal Reserve just cuts its benchmark rate by about 25 basis points. So it's now 4 to 4.25% versus 4.25 to 4.5%, which it was for the majority of 2025. All right. So this is its first cut in 2025. The Fed flagged that that downside risks to employment have grown. Inflation remains elevated, but it's moderated. and that further adjustments will depend on incoming data. Okay, so they're not done with the cuts. However, we don't know if they're going to cut any more this year, but the idea is to cut a little bit more as we continue on into 2026. And what's interesting is the descent, right? So Fed Governor Stephen Moran preferred a half percentage point cut. So he wanted a little bit more of a cut, arguing that the current rate is still about 2 percentage points too high relative to what he considers a neutral setting. Okay. So they wanted it to be about, just a little bit more, wanted a bigger cut, if you will. Okay. He wanted a little bit of a bigger cut. So that divergence pretty much underscores how divided the Fed is right now. And as pressures mount between supporting growth and holding the line on inflation, right? So the divergence is there, right? They're not in one accord in terms of what it should be, but at least they've done something so far this year. Okay. In markets, the move has a rippled effect. So it definitely has rippled fast. Global equity funds logged $28.36 billion in inflows in the week ending September 24th. And it's a rebound after weeks of outflows. In particular, U.S. equities led that rebound as hopes intensify that the Fed easing cycle has begun. Okay. Bond funds also saw healthy inflows, especially in shorter term and corporate bonds. Meanwhile, commodities like gold and other precious metals spiked as investors sought safe haven plays amid uncertainty. And yet, there's tension in the data. Okay. Inflation measures, especially core PCE, remain sticky around 2.9% year over year. So it had a bit of, it did fluctuate month over month, but not year over year. Okay. So it's still around 2.9%. Consumer spending is showing signs of cooling. Tariffs are adding friction in supply chains, and the labor market is softening. So job growth has slowed. That makes the Fed's path ahead tricky. Do we do more cuts to support growth, or do we slow the pace to guard against inflation flaring back up? All right. The OECD recently weighed in and suggesting that the Fed has room for 3 more rate cuts this cycle, projecting that the policy rate could reach 3.25% to 3.5% by spring of 2026. And on the flip side, some market analysts caution that strong growth, Q2 growth was revised to 3.8%, and resilient corporate earnings may complicate the Fed's willingness to move too fast. So what does all this mean for us? Business owners, investors, capital strategists. We stand at an inflection point, guys. Okay. Interest rates are beginning to ease, but not so fast that long-term rates will necessarily drop in tandem. Yield curves could flatten or twist. Capital availability will shift. All right, guys. Just note that capital availability will shift. Strategic positioning will matter more than ever. In this environment, the questions we must ask ourselves are: where do we find durable yield or growth in portfolios, given the backdrop of so much uncertainty? How do we align capital deployment with deeper purpose, right? Not just chasing returns, but anchoring in values. How do we coach behavioral mindsets to stay steady, calibrated, and resilient when markets oscillate the way that they have? And for those of you with a foot in commercial real estate, what's the one key question you should be asking right now, given the rate environment? I view this juncture as an opportunity, a moment to lean into clarity, to refine capital strategy, to adapt your financial planning with purpose, not reaction. Because in the times of flux, the highest performing portfolios often emerge intentional decision making, not momentum chasing. So tonight, we'll weave market context, capital strategy, behavioral discipline and values aligned planning, and then lean into a compelling conversation with someone who brings deep wisdom and real world experience in this space. Now, instead of a live interview tonight, guys, I'm excited to bring you into a powerful pre recorded conversation that I had earlier with Kathy Williams. Kathy was unable to make it, but she was willing to definitely go ahead and do a little bit of a pre-recording for us. And I'm so excited because I got so much out of this interview. So hopefully you get a lot out of it as well. So she is a seasoned financial strategist, an author, a coach who specializes in value-driven wealth building. Over the past 20 years, she's consulted with high net worth families, led behavioral finance initiatives, and structured capital allocations that reflect both performance goals and personal purpose. She's known for bridging the quantitative and the soulful in finance. And that's exactly what she does in this interview. So grab your pen, open your notes app, or just settle in. And here's my pre recorded interview with Kathy Williams. Give me a moment here. I'm just queuing it up. Let's jump right in. So, from a wealth management and values-driven perspective, when might commercial real estate be the right asset, but only if structured to align with one's long-term goals?
Commercial real estate is an outstanding wealth building asset. Particularly when it's aligned with values. When you're looking for income, it has great income potential. And if you want predictable, steady cash flow, and compared to residential, it fits long-term goals. It fits, it works best. And if you have a long-term horizon, you wouldn't certainly get commercial real estate at 55 when you're getting ready to retire at age 60, for example. If you're looking for tax, strategies like depreciation or like a 1031 exchange, if you're looking for appreciation and value growth, it also heads against inflation. And it's a great diversification tool as well. All this is great and it's wonderful, but it's even more powerful when it aligns with your values. Particularly, for example, like if some people want to invest in affordable housing because they have a inclination to make sure that is taken care of. I had a client that was very passionate about that, and that's the reason why she went into that. Or for example, you wanted to get in small senior housing situations or medical facilities. It has to be something that you believe in, that it's purposeful for you. It can't just be for money only, and that's with any investment, actually. Commercial real estate is best for someone who wants the income, of course, impact, it aligns with your life purpose. And, bottom line, folks buy commercial real estate for many, many reasons: financial, some strategic, some personal, some, people who just don't have values at all, just, quick rich schemes and all of that. But it is a wonderful vehicle to get into. But first, you must have some reasons on why you want to get into it in the first place.
I love that, Kathy. Absolutely. So always start with why. I know that book by Simon Sinek years ago talks about always start with why. And I find that with anything that we do, we absolutely have to start with why, because investing in real estate period, whether it's residential or commercial, can be very difficult. And so when you hit those hurdles, your why has to come into play, because you're not going to get to the end of that without that strong why.
That's correct.
So Kathy, how do you help clients build financial systems that are resilient and adaptable, no matter the investment vehicle they choose?
Well, a financial system, or what I call a financial plan, is more than just tracking of numbers or investments. If you give structure and direction, it also gives you peace of mind. Okay.
Yes.
It allows you to become hyper focused on intention and values and goals, and ignores all distractions.
Yes.
So what I say often to clients is the amount of financial products that you own does not necessarily design the plan or the system. A lot of people think if they buy enough financial products of any kind, a retirement plan here, a life insurance policy there, real estate or investments, mutual funds or whatever, that somehow that equals a plan. But products alone do not equal a plan, and it does not create resilience. It helps. Products help, but does not create resilience. A financial plan or system is built around goals, values, cash flow, strategy, and a why. The why is very, very important, just like you said. It's extremely so these are tools that it's your blueprint, if you will. It's your guiding star when you have these things. And what I tell clients also is that these investments will change over time. They'll go up, they'll go down. And what really matters is the system or the plan that supports them. A resilient financial plan starts with clear goals and values and knowing what you want your money to accomplish. Then we build the diversification, liquidity buffers, tax and estate strategies, insurance to protect the plan, to keep it stable. No matter what happens in life, the uncertainties of the market, inflation, health changes are adaptable and comes with a regular review of your plan and the alignment and realignment, if you will.
I love it. I mean, one thing you said there that just really jumped out at me is products alone does not equal the plan. I mean, that is a big thing. Like, I know that there may be some people who have done planning before, financial planning. They have a financial planner and so on. But there are folks out there, just like you said, who they'll go ahead and grab 15 different products and they think, yep, I'm stable, I'm good. But it doesn't provide that resilience. Oh, that was so good.
That's right.
That was good eating. So you're both a wealth manager and a financial coach. How does addressing behavioral and emotional elements improve financial outcomes, especially during big investment decisions?
Here's what I've learned is that money decisions are not just about dollars and cents. They're about, emotions, and emotions come into play quite a bit when you're dealing with money. In fact, when I'm sitting down with a client, we're dealing with all kinds of emotions. It's not about just the money. We're dealing with everything that exists in that family's life. And, so the emotions and their beliefs, the fears, and the stories that we all carry with us are all part of our money decisions. So I've seen clients ready to jump into the nearest deal that they think is the most mighty, wonderful deal of their lifetime, and they can't miss it, right? And also they deal with situations out of fear, also missing out or freeze completely because of past financial mistakes. And of course, past financial mistakes, that's human, of course, how they respond to that. But when we pause, reflect, and bring our values and goals in alignment against our emotional side, everything can change if you let it. And first, the key is pausing and reflecting and not making quick decisions. As both a wealth management person and a coach, and a person who inspires others to motivate them to move toward, growing in their life and becoming, as I would like to say, I help people slow down and ask, does this choice line up with my values?
Yes.
Is it really going to help me and build the wealth that I want for myself long term?
Yes.
Is it going to, rather than take care of my wealth, is it going to sabotage me and go into what I call, or many call, scarcity instead? Okay.
Yes.
So when you make decisions from that place, not from fear, not from pressure or from greed, your outcomes are stronger and your peace of mind is greater. So, for example, I talked to a client, recently, and I suggested that it's time for them to move away from this particular stock. And because it is done so well, and they wanted to hold on to this beautiful stock. I mean, after all, I've made so much money though, Kathy, And after talking with them, they decided that, yes, I'm going to go ahead and do what you say, Kathy. And then, a day later, it said, I changed my mind. It's just too delicious, And then earlier in this year, when that stock plummeted, and they were panicking then. They were in the state of panicking and fear, And so it's not always the numbers or the growth or all that, the beautiful, delicious stock that you own that's made you so much money. It's really your values and your goals. Does it align with that? If you have said that you want preservation or you want protection, then you have to listen to that, what you said that you wanted, instead of the delicious, delicious stock that has made you money. Greed pays into play for many, many people, actually.
Yes, it does. Yes, it does. And, I'm always so conscious nowadays, because again, as I was younger coming up and so on, I definitely was more for the short term. And I guess that's the time when you can do a lot more experimentation, with different vehicles to get wealthy and so on. But I realized again, as I age, that it does make sense to go long term versus just trying to go for the immediate gratification. So very well said indeed.
I might want to add that most of my very wealthy clients, they pay no attention to the quick deals or the things they heard or the greed. They just move along and are dealing with their lives based upon what means something to them. They're not paying whether the market is going up or down. They're just, none of my very wealthy clients pay attention to the market. They pay attention to what their goals are, what their values are.
Yes, very, very well said. So what are the most common planning missteps you see, Kathy, whether it's real estate, stocks, or business ventures, and how do you help clients course correct?
Yeah, that's what we were, I talked about it a little bit in the last question. And, people jump into something without a real plan, and when they do have a plan, they sometimes chase that hot investment. Or put money into something that a friend recommended, or they think that a strategy is, the right strategy just because somebody else did it. But the truth is that sometimes all those things are out of alignment and of their values and their goals. So some common ones that I see, are of course, overspending, living beyond your means, not saving consistently, especially for emergencies and retirement, carrying too high of a debt situation, saying to yourself that it's okay for me to get into debt because it was on sale, failing to budget, not tracking where money goes, ignoring the risk that you have with no insurance, and acting on emotions and trying to keep up with the Joneses, is a big one. And comparing yourself to someone else, trying to, get the investments that somebody else has that is not based upon your values, it's based upon somebody else's values. And take, for example, lottery winners, they get all of this money, right? And they have so much, but usually they're working with all this money without a plan. And that's the reason why it disappears so quickly, So, and I like to say to everybody that mistakes happen, you shift from failure to feedback. And what did this choice reveal, about our habits and beliefs or the pressures? And I encourage reflection. What were you hoping this decision would give you? And what have you learned from this experience? When I work with, clients, the course correction is always pause.
Yes.
Step back, reconnect with your values and long-term goals, and realign the strategy to serve your bigger vision, not what you're experiencing at the moment. Setbacks and missteps don't define you.
Yes.
Okay. What defines you is how you reset, learn from the experience, and move forward. Not keep looking back at your mistakes and putting yourself in a state of guilt. It doesn't do you any good.
That's so good. That's so good. Yes, because again, a lot of people get stuck in their missteps. They get stuck in what they did and how they didn't handle it well. But as long as you can go ahead, Les Brown said it well. As long as you can look up, you can get up. Okay. Right. So even if you made some bad decisions, let's start from today and start making better decisions. Go forward. All right. So we have actually hit the part of our segment where we're going to do the lightning round. Okay. So I'll ask you a couple of questions. Whatever comes to mind, go ahead and spew it out. One financial value everyone must define before investing.
I think being a good steward.
Awesome.
Okay.
Debt or equity. Oh, I'm sorry. Go ahead.
So the steward the value. Are we on that one or?
All right. No, we are on the one financial value everyone must define before investing.
I would say being a good steward, because that leads to discipline. Okay. Because if you're being a good if a value is good stewardness, then also what comes along with that is being disciplined.
That's awesome. Debt or equity? What's your default advice?
I don't have a negative on either one if it serves the purpose. Debt with regard to buying a home or getting more real estate. That's all good. But making excuses by getting into debt on credit card debt, that's, I have some objections towards that, or buying a car every 2 years or whatever. I have some objections to that. But as long as it aligns with your purpose, then I think that you're good.
Okay. Quickly, worst financial advice you've heard and why?
When you just follow the crowd. If everyone is doing it, it must be right,
Right. Okay. Best way to align money and meaning in one sentence.
The moment you move past excuses, your wealth stops being random and starts reflecting your true purpose.
I love it. 2025 financial must-have mindset.
Intention, resilient intention,
I love it.
Stop making excuses, start investing with purpose, stay adaptable, no matter what the market does, just stick in there and do what you need to do and look for the long-term plan, not the short-term, situation. And keep your emotions out of it as much as you can.
I love it. Kathy, thank you so much for joining us today. Go ahead and let everyone know where they can find you if they want to go ahead and connect with you beyond this podcast.
www.financiallighthouse.net. That is my business, and the email is info@financiallighthouse.net. The lighthouse to your financial strength and independence.
All right, Kathy, it was such a pleasure having you today. I can't wait to be able to connect with you even outside of this, and just to hear a little bit more about the projects that you're going to be doing outside of even Financial Lighthouse. So we thank you again as a guest of the Capital Strategist Podcast. Wow, guys. I mean, Kathy just dropped so many jewels for us. And it was such a fun time. We had such a great time working together on this. It was absolutely amazing. I am just so grateful for her to have stepped by to give us some gems. So I'm going to talk through some of the points that I got from this particular time with Kathy. So one of the things that she had mentioned was products alone and does not equal a plan. Okay. Investments will change, right? But the system or the plan is what matters to support them. That was some really good stuff there. Shift from failure to feedback, guys. So again, if you have made any missteps, that's fine, but don't worry about the failures. Like, start to shift, right? Look at go and do some reflection, understand what you did not so great and what you would want to do better, and then do the better. All right. Focus on reflection. I just mentioned that. And setbacks and missteps don't define you. Just go ahead and move forward. It's really, really good stuff, guys. It may be elemental to some folks, but definitely life-changing to others. And so if you have gotten anything out of her segment, please let us know in the comments. What are you all saying? What's going on with you? What did you get from this segment with Kathy? Let's go to the comment section and see if anybody is asking questions, etc. Again, really good to have Kathy here. Do you all have a financial plan, right? Let me know in the comments if you have a financial plan. So I'm going to take a moment just to take a look at the comments here, see if anyone has any comments. Okay. All right. Let's see if anyone has any comments or questions. Thanks again for joining today, guys. Amazing. Just absolutely incredible time with Kathy here. Right. All right, folks. Okay. Wonderful. All right. So Kathy never disappoints as usual. Again, it was really nice talking to her. And if you took away as much as I did from that conversation, you're probably already rethinking how your goals, your capital, and your values are aligned or not, right? Whether you're building a business, scaling a portfolio, or navigating a career shift, this is your invitation to pause, recalibrate, and act with clarity. All right. That's what we do here. If you want more insight like this, connect with me on Facebook or LinkedIn. So connect at the Capital Strategist on YouTube. The live will actually be placed there for future. So if you wanted to go ahead and look at this live again, you can see it on Facebook. You can view it on LinkedIn, but you'll definitely also be able to see it at the Capital Strategist on YouTube. Okay. I am going to put this up on YouTube at the Capital Strategist. Okay. So join me there and you'll be able to see the replay of this one and also past podcast. All right. And be sure to subscribe so you don't miss the next episode that we have. We do these once a month. And again, I look for folks who are really the experts in their field to come in and give us the insights that we need. So then that way we can navigate these volatile times. Okay. And go up and down, policies change all the time. And so we want the experts to come in and kind of help us to be able to navigate them. So until next time, guys, stay strategic, stay bold, and as always, build with purpose. Thank you.